Good evening. This is Duane Lowry for the DPP Grain Desk on Sunday, November 3rd. Tonight, market looks like we're going to start off, I think, mostly steady. I think we need to talk about a few things that happened in the last week or so, and especially on Friday, to make sure that we're looking at markets in the proper context. On Friday, during trading hours, Informa came out with their crop estimates, higher than their last estimates, higher than the last USDA, basically 161 bushel an acre on corn and basically 43 on beans. I think these estimates were largely in line with trader expectations. And then after the close, FC Stone came out with their estimate, which was very similar in corn and slightly less than Informa at 42.8. But I think the important thing here is, I don't think there'd be any argument that the market has been more bearish corn than anything for the last 30 or 60 days. The market has been more bearish corn and more confidently bearish and more uniformly bearish, and to the point where over the last week or two, the market, any potential bulls have pretty much been demoralized completely to the sidelines. And this is the time of year that if the market reaches this demoralization type of atmosphere, it's very difficult to recover that in November and December. You can say that the trends are established and we might go sideways. You know, I don't care how you want to look at it, but when you get towards the end of the year, a lot of traders want to have reduced activity anyway, and a demoralized attitude only adds to that. But I think it's important to look at it that even though we had these large numbers from Informa during the trading hours that the market could spend time absorbing that data, corn for the entire session on Friday had a 4-cent trading range and settled, down a penny. The other thing to look in perspective is, compared to the first day of October, corn is less than a dime lower than it was on the first day of October. So despite all this bearishness, despite the larger than expected yields and the continual daily give up of bullish optimism or potential for a recovery rally, the market's only down a dime from where it was on the first day of October. So I think that's important to look at. The other thing that's clearly developed over the last 30 days, or been confirmed over the last 30 days, we've got good demand for U.S. corn. U.S. corn in the export arena right now is competitively priced. We had what I would consider bullish export sales data last week. The market completely rejected it and did a face push for corn on the day that we had the bullish numbers. Market traded higher, closed lower, closed low range, closed near its lows. So once again, adding to that demoralization type of atmosphere. But that being said, the demand is good. U.S. corn prices are competitive priced. Demand is better than I think people had expected. And I think it's reasonable to believe that USDA will have to raise their corn exports, probably will have to raise their bean exports as well. We'll talk about that a little bit later. But there are positive things developing from the standpoint to suggest values are cheap enough, to suggest that bearishness has been factored into current values. And with this demand that's better than expected, once the farmer gets his crop put away, and in the case of corn, whatever sales being made, I think, are relatively minimal from a normal perspective. Once that crop's put away, the farmer's not going to come out of that, bring that out of the bin quickly or easily. Even if he's demoralized or discouraged, he's just going to kind of close his mind towards the markets and take a look at it, around the first of the year or after the first of the year. Remember also, too, the farmer has no cash squeeze type of situation. He's not forced to make sales here. So I think once it's put away, it's going to be in pretty tight-fisted hands. So good demand, and we haven't even touched on it domestically. We certainly have good demand domestically. The overall offtake of corn is set to be better than people anticipate. So whatever large carryout numbers you hear now, as the season progresses, those are probably going to get smaller. Friday, USDA will offer a vote on what they see national yields in their November report. I think the trade expects it to be something, large, but I think there's anxiety about the report just because the USDA did not have the October report because of the government shutdown, and that creates a certain level of uncertainty, even though the trade is confident the numbers are going to be large. As far as beans let's go back a second. As far as corn tonight, I think you're looking at a steady opening. I don't think there's anything new in the FC Stone estimates that would create any new atmosphere compared to what we had from Informa during the session. You got a weekend of harvest activity. You know, maybe some will say that'll cause us to be lower, but keep in mind again, we're 10 cents lower than we were on the first day of October, more than a month ago. We're not doing anything in a big way or in a fast way here. So I think you're looking at pretty much steady openings. Could there be some short covering going into Friday's USDA report? I think that's, you know, possible and reasonable expectation. As far as beans are concerned, here too we have very good demand, better demand than expected. I think the USDA is going to have to be, will be forced to raise export projections in the months ahead. South America is in fine or acceptable shape. Early season, if you wanted to look at weather there, and I don't think we're trading weather. What the conditions down there are favorable and acceptable, and they've improved probably in the last week or so from what they were, but I don't think that's really a market factor. Beans on Friday closed very poorly. That might create some tech selling here tonight or early this week. I wouldn't rule that out, but the same token, you know, demand is phenomenal. It's very, very good, and soon the U.S. soybean harvest will be over, and the beans that are put away, back up a second. Farmers have been selling beans fairly aggressively, partly because they don't want to sell corn, partly because they're reasonably happy with the price when they compare it versus corn prices, and so farmers have been selling beans. But you can be assured that once they're done with harvest, that's it. There won't be any quick move to pull beans out of storage to make sales until well after the first year. Maybe these are spread situations where old crop will be supported versus new crop or deferred months. You know, that's probably a reasonable assessment of what is likely to happen over the next several weeks. But I think it's also supporting flat price. Global demand is good. I don't see any reason to think that that won't do anything but continue to surprise us to the you know, better than expected in terms of exports and demand. So soybeans are probably called, you know, steady tonight, maybe a little bit better on ideas. Friday's weakness was overdone. So look for things to be steady. I don't think there's going to be a lot of short-term trading opportunities in the next 60 days, but I think there are opportunities for longer-term ownership in corn and beans at current values. Maybe we need to get the bearishness of a USDA report out of the way, a confirmation of what we already know. Maybe that's what's going to happen, because we certainly couldn't rally on bullish news last week. So maybe we can rally on once we get this report out of the way and confirm what everybody already knows. So look for steady openings, possibly some short covering tendencies into Friday's USDA report. For the DPP Grain Desk, this has been Duane Lowry. Thank you.